Hello, I'm Greg Ninnis of interest.co.nz, and today I'm joined by Olly Newland, who's the Director of Newland Burling, a property management and property investment advisory company. Welcome, Olly.
Oh, thank you.
We're living in interesting times for the residential property market, and there seem to be new figures out every day giving us a fresh insight into what's going on.
That's right.
Some people are saying it's been a bubble and the bubble is bursting or has burst, and we're seeing indicators that prices are softening a bit and sales volumes are well down, particularly in Auckland, perhaps less so around the rest of the country. Where do you think the Auckland residential property market is at the moment?
I don't think the bubble has burst.
Right.
I would say it's leaking and become a little bit soft around the edges. As you said before, the number of properties sold at auction directly has dropped quite a lot. And the number of signs going up has increased a lot. I see a lot more signs in the streets. People are trying to sell that way. And so I think we could say the Auckland market is choppy.
Right.
Might be the best way. It's choppy. It's not nowhere near as buoyant as it was a year or two ago. It's still money to be made and people will still sell their places, but I think we've reached probably the pinnacle at the moment.
Right. So it's either going to, you think, remain at a steady sort of pace or perhaps down a bit from where it was a little while ago?
I think it's going to plateau.
Okay.
There'll still be money to be made and there's not a flat line. Just zigzag. Unless some event occurs which I can't imagine, some political or overseas event occurs, a big shock or something which changes everything. But at the moment, I think it's just going to plateau along. There'll be flare-ups. Right. This suburb or that suburb, out of Auckland, this little township or that township will flare up here and there. But I think we're going in for a long period of, slowly over the next year or two, a long flat period. It may last for 10 years. Okay.
And outside of Auckland, some people believe the rest of the country follows what Auckland does. And certainly we've seen investors, a lot of them, when they couldn't get decent returns in Auckland, start heading to the provinces. What do you think might happen there?
Well, I think they'll follow Auckland in the end. There's a sort of a grunt factor. I call it a grunt factor, where prices reach a point where no matter how cheap interest rates are, the rental just doesn't cover it.
Right.
And I think many areas are reaching that grunt factor and people are just going in it for the capital gain. If that capital gain starts to slow down, which it has here and there, then the people that are buying will start to think twice whether they should carry on.
Right.
And that, of course, is a big worry where the builders will continue building new houses or apartments because if the demand drops off, they're the first to feel it.
Okay. Outside of Auckland, of course, they haven't got the same population growth pressures that we have here. Do you think if the market becomes satisfied, if you like, putting it that way, elsewhere, that there's because there isn't the demand pressure pushing up, that it could drop away a little bit more severely than it has been in Auckland, where we've seen a slow deflation, as you called it?
It could. I think you're on the button there. I think it could drop away. And what I'm concerned about is this building boom that everybody's encouraging may end up, because it takes so long to build something, may end up with an oversupply, as has happened in Australia and other countries, an oversupply of apartments and cheaper houses. And we may have a flood of them and then a lot of empty ghost apartment blocks. Right. I'm looking a little bit further ahead, but I've been through that in Australia and the Gold Coast and so forth, where they over-enthusiastically build too much. And well, this may be a few years down the line, but we've got to watch it.
Well, developers are very gung-ho and they'll keep pushing their plans forward until absolutely they can't, maybe until the bank pulls the funding or something.
It's happened already.
That. Yeah. Very good. So if you were an investor or somebody who had a bit of spare cash at the moment, what would your advice be? Is residential property still a good option for people?
It is if you don't care about the return. If you're happy to invest $1 million or whatever it is and happy to get effectively 1.5% or 2% return on your money with all the hassle of tenants and all that sort of thing, then it's probably as good as any other. At least it's bricks and mortar and you can see where it is and it's in your control. But as a return on your investment, it's pretty lousy.
Okay. The returns, of course, are a lot lower in Auckland than they are elsewhere. And as we said before, people have been going off to Taranaki or Tauranga or
well, the returns aren't much better. Right. The returns aren't much better. It's marginal. You only need to have a vacancy for a couple of weeks and all the returns are gone.
Right, okay. What about the commercial property side? That's a very different market.
Absolutely
but
different.
now, I mean, a small commercial property, perhaps a shop somewhere in the suburbs or something like that, can actually be cheaper than an ordinary house in Auckland.
Oh, yes.
Should people be looking at that sort of thing?
Yeah, we've got clients who are buying commercial properties for $200,000, $250,000, producing 6%, 7%, clear, net in the hand after all expenses.
Right.
Because the tenant usually pays all the outgoings. There's a good argument for that, but it's a different discipline altogether. When you're buying commercial property, you're buying a business. It may be land and buildings, but you're actually buying a business which houses other businesses, and it's treated that way. And you increase the value of a commercial property by treating it as a business, increasing the goodwill factor and so forth. But it's a completely different discipline. You can't just switch from one to the other without knowing what you're doing.
Okay. How is the average investor, if you like, the so-called mums and dads we all hear about, how well set up are they to manage a business like that, if you like, by investing in commercial property?
Well, it's not that difficult if you're prepared to learn about it. It's not something you should just go down the road and buy, because there's lots of fish hooks in commercial property, which if you're not careful, you could take a real bath on them, because it's run on a different system with leases and terms of lease and all the conditions of the lease, quite unlike a tenancy agreement. But of course the advantage is that there's no tenancy tribunal, there's no bond limitations, there's no LVR rules, there's no bright line tests. Eviction is much easier. The tenants look after the interior. They're there for years and years and years usually. So there's some advantages, but you have to understand what you're getting into. Right. Even if it's a $250,000 one or a $25 million one.
Okay. And are you seeing growing investor interest in that area?
Yes, it's compared to residential, where you have, say, 35% clearance rate at auctions, and in the commercial auctions, the rate is almost 100%.
Right. So that hasn't gone down at all.
No.
Is it still going up, do you think, that demand?
The demand is getting steadier because people are switching and they understand that commercial property is that shops, offices and factories and so forth is an alternative.
Right.
The capital gain, though, depends very much on how good you run the place, like any business.
Very good. Yeah. Great. Well, thanks for coming in today.
Pleasure.
It's been a pleasure talking to you,
Thank you
Olly.
very much.